Hello, and thank you for joining us at XM.com for today's Forex preview video. I'm Cristina Marujos. Joining me today is Senior Investment Analyst Rafi Boyadjian. We'll be looking at the Bank of England's policy meeting on June 20th. So we recently saw policymaker Michael Saunders use unusually hawkish language, indicating that the Bank of England would raise interest rates a lot sooner than markets expect. So do you think we'll see much more similar signals at this meeting?
Well, basically for tomorrow's meeting, we're just expecting the Bank of England to stick to the script and say that we should expect some further very gradual and limited rate hikes over the coming period. That's been the stance for the Bank of England for some time now. Basically, their warnings, if you like, or that further rate hikes are needed are those forecasts are conditional on there being a smooth Brexit, and Brexit we know that is far from resolved. So the Bank of England pretty much has its hands tied. They really can't do anything until we know what the Brexit outcome will be. But for the time being, all they can do is to just stick to their central forecast and just remind the markets that if there is a smooth Brexit, then interest rates will need to go up.
We'll look at the Brexit saga in a little bit, but before that, I wanted to ask you about the data we saw out of the UK recently, which was quite unpromising. Do you think that data will affect the decisions made at tomorrow's meeting?
Well, so far it hasn't. We did see a sharp decline in industrial output in April, and the May PMIs have also been very weak as well. So the Bank of England probably thinks that that's probably a one-off. But if that becomes a trend over the coming months, then the Bank of England will have no option but to shift its stance, because of course it's not just the UK that's slowing down; the rest of the world is also slowing down as well.
Well, with the Brexit uncertainty still looming, we saw Boris Johnson earlier this week maintaining his lead in the Tory leadership. And given that he's a hard no-deal Brexiteer, do you think the pound will be affected? And if so, in what way?
Well, the pound has already fallen quite significantly in recent months, and that's been on the expectation that the next Prime Minister will be a hardline Brexiteer. So I think most of those risks are already priced in to the pound. So whoever replaces Theresa May, the focus will be on what their first move will be, whether they will try to renegotiate the withdrawal agreement, whether or not they're going to promise that there's going to be Brexit on October 31st with or without a deal. So until we know more, the pound will probably just drift slightly lower. So we're not expecting big declines in the pound unless we see some major change in the political position of the UK.
I see. Rafi Boyadjian, thank you for joining me today. And thank you for watching this Forex preview video here at XM.com.